Welcome to my channel. I'm your investment partner Josh. I'm going to be giving you some stocks that could absolutely fly this week depending on some of the catalysts that we are going to discuss. There are some major macroeconomic factors going on this week that could affect stocks in general. But there are also some specific catalysts on a few individual stocks that I really want to talk about. There's one in particular that looks really juicy and I will get into that. So these are the super important things that you should know this week along with the stocks to watch. Welcome back to Invest with Josh. If you get anything out of this video, leave a big fat thumbs up. Leave it in the comment section below. Let me know if you're playing these stocks as well. Without further ado, let's get right into it. I'll start off with a stock that I want you to keep on your radar. Jazz Pharmaceuticals, ticker symbol JAZZ. Now, it goes without saying, please do your due diligence. Do not try and swing trade based off a YouTube video of mine or anybody else's for that matter. As we usually see in topping markets, there was a round of profit taking. The stock is now down almost 22% in a matter of couple of weeks. But here's the important part. They have an FDA approval date coming up this week, as a matter of fact, August 12th. This drug is intended to treat narcolepsy. The drug's name is Xwave. As I said, on top of that, Jazz already beat EPS and revenue estimate in their last earnings call. Compared to even some of the best pharmaceutical companies, their gross profit margin is at 92% compared to a sector median of 55%. Their EBIT margin, EBITDA margin, net income margin, their cash from operations all look healthy. If we take a quick snapshot look at the tip ranks, they earn strong buy targets from Jefferies, JP Morgan, as well as UBS and Barclays. The average price target is $214. Again, it currently sits at $150 at the 300-day moving average without an oversold RSI. That has not happened since February 2020, right before the pandemic crash. Now, obviously, with binary events, you get binary risk factors. So if you decide to trade Jazz Pharmaceuticals on the hopes that it does get the FDA approved, just know that there's a chance, obviously, that it might not. However, that's why I like Jazz, because some of the fundamentals that we went over before. If you take a look at weekly or monthly chart, you'll see that Jazz routinely hits the $190 mark, or going all the way back to 2014. It trades in its parallel channel. I might also take a manageable finite amount of money and put it in some call options that expire August 20th. So that's the first catalyst. The second one is more of a macroeconomic one. It is the infrastructure build. This discussion never dies down. Our trusty politicians have been working all the time, putting in weekend hours, and it looks like this weekend we came closer to a passage in the Senate, obviously. Then it will have to go to this House for approval. We are looking for high growth plays in emerging sectors like solar and EV infrastructure, as well as undervalued homegrown EV plays like Ford and GM. Yes, I know Tesla is technically an American car company as well, but we have positions in Tesla that we've established a long time ago. I'm talking about undervalued that could see a hyper growth rate in the coming 1 or 2 years. A stock like Ford used to trade in the $18 range, and this was before the EV revolution. It currently sits at 21 weekly EMA, just under $14. We continue to swing trade Ford because it does respect these trend lines very well, but with the potential for hypergrowth in the EV sector, the fact that the government is willing to support American companies, or seemingly so, are we saying that Ford is now 25% less valuable than it was a few years ago when it was trading at $18? No, of course not. Also coming this week is a CPI report where we will get a glimpse into the inflation data and its effect on the economy. I'm really curious to see how those who fund jobs will actually affect the consumer price index. This can obviously have an effect on interest rates, which could affect growth stock, mainly NASDAQ stocks. As a hedge, I do have a put spread on the Qs, which is the ETF that tracks the NASDAQ. Now, I've talked this before, but there's one stock that I like buying on the overreaction, and that's Activision Blizzard. Again, just like a lot of stocks that crush earnings, there was an overreaction not only due to an earnings sell-off, but there are some lawsuits in the work, and there was a change of leadership at the top. However, at a 25% discount, I'm happy buying into ATVI for the long term. It is also oversold on the RSI for the first time in 3 years, so hopefully we get some tailwinds from that video game report on Friday. But if not, this is a long-term play anyway. Lastly, take a look at the Bitcoin mining stocks. So Mara and Riot, mainly, especially as Bitcoin breaches at 45K level. Mara actually has earnings coming up this week, and it recently closed above the 100-day moving average for the first time since early May. Riot also has earnings coming up this week, forming this double bottom. It looks like it actually has a bit more upside than Mara, percentage-wise. Anyway, traders, that is all for today's video. If you got anything out of this video, leave a big fat thumbs up. Leave it in the comment section below. Let me know which one of these stocks you're trading. See you next time.